Hey, if you are looking to start a trucking company and you are looking for financing to maybe purchase a truck or just for working capital to get the business started, and your bank or lender or even potential investor has asked you for a set of financial projections, and you're kind of in the deer in the headlights phase and trying to figure out how to put together some numbers for your trucking business, well, you've come to the right place because we have built a trucking financial projection template specifically for you. My name is Adam Hooksum. I'm the co-founder of Projection Hub, and over the last decade, we've helped thousands of entrepreneurs create financial projections for investors and lenders. But specifically today, we're talking about our trucking template, which is built really well for startup trucking businesses in particular, and also can be used with some customization and work for existing trucking businesses as well. So I am going to dive into the template and show you how it works and how to fill it out. If you haven't already gotten the template, you can look at the link in the video description below and go grab the template and then get started filling it out with us. So the first thing I want to show you here is really kind of starting with the end in mind. This is kind of your end product. At the end of filling out the different assumptions in the template, you're going to get these nice charts and graphs and tables that you'll be able to provide to a lender or potential investor, and kind of get a glimpse of what those look like here. So the other thing you're going to get is 5 years of projected financial statements. So you'll have a projected cash flow, 5-year projected income statement, 5-year projected balance sheet, and then you'll have the income statement, cash flow, and balance sheet for 5 years, but in a monthly format. So if you need that monthly detail for your lender, especially in that first year or first couple of years, we'll have that here as well. So now let's jump back to the beginning here and show you how to actually fill this template out in order to produce your projections. So the first thing you need to know is that any cell that's highlighted in blue is an assumption you can change. And we've kind of pre-filled this template out for a startup trucking business in mind. And I'll show you how we've got this filled out. So we're saying this business is going to be starting here April 1, 2022, and you can change that date. You're going to have a personal investment of $20,000. So we're assuming you're putting in your own money of $20,000. Now, if you have other potential investors, you could add those investors in these cells with the dollar amount that they're planning to invest. Now, the next thing here, I want to show you this accounts receivable term. So this is saying that 100% of your sales are paid upon delivery. Now, that's probably not normal for most trucking businesses, and so what I might actually recommend is changing that to 0 and saying instead 100% of sales are on a net 30 payment, meaning you'll be paid in 30 days. You don't have any inventory, most likely. We have a spot to add fixed assets, so if you have a building or other equipment other than the trucks, you can add those items here. But I've just put these as 0, so if there's a 0 here, that means we're assuming there's no buildings, no leasehold improvements, no other equipment. So then down here in this table is where you add the trucks. And so I have added 5 trucks, and I'm assuming that you're going to start by purchasing 1 truck. And so we've got 1 truck here. In this drop down, you can select purchase or lease. So I'm going to say you're going to purchase the first truck for $80,000. And years until sale, so you'll use it for 10 years, we're saying, and after the 10 years, it'll be worth $10,000. We're saying that in month 1 of the projection here is when you'll be purchasing. And we have the amount financed per truck. So let's assume we're going to get dealer financing for $60,000. And then you're going to put in that $20,000 personal investment to cover the rest of the $80,000. And that dealer financing is going to be at 8%, and we're going to pay that back over 60 months. Now, what I've done here for these truck 2 through 5, I've actually selected that these will be leased. So you could choose to purchase all the trucks, you could lease all the trucks, but I wanted to show you examples of both. And instead of starting out, because we're kind of, again, thinking about this as a startup trucking business, so we're saying, well, maybe for the first year, we just have the one truck, and you're the owner-operator, and you're operating that truck, but hopefully you grow, and so here we have month 13, so the first month of year 2 is when we're assuming you're going to lease that second truck. And then the first month of year 3, or month 25, month 37, and month 49. So basically each year you'll add another truck is the way we've built this out. And again, if you plan to only just have one truck forever, all you have to do is just hover over this, or select a cell and hit delete, and you can just delete all of this. So that would clear that out for you. And then we have, again, we're assuming 60 months of lease payments, and here's the monthly lease payment that we're assuming per truck. Of course, prices for leases could vary depending on what kind of lease you get, what kind of truck you get, and a lot of different factors, so keep that in mind. And then down here, we put in a small $25,000 SBA loan, and this was really, the thought is to have some working capital for that first few months of insurance and fuel and just operating costs in the first month or so while you start driving loads, but maybe you don't get paid for a little while. So that's what this loan here is for. And you can add more loans, you can change this and make it a larger loan. You could also make this the loan that you use to purchase the truck. And so instead of putting amount financed here as $60,000, you could just make this loan here 60, or in this case maybe 85,000 from one SBA lender perhaps, instead of doing the dealer financing. This is the idea with this, is I guess more so like dealer financing is the idea. So and then once you do that, you can jump over to our input revenue and cost of goods sold. So here we're just entering in some assumptions. I'm going to zoom in just a little bit. All right, so we're saying that we're driving 5 days per week, and there's kind of two different types of driving we could do. Dedicated routes, and we're saying the maximum miles driven for dedicated routes would be 550 miles, and of course you could change that to be more or less. And then max miles driven for just kind of over the road or spot freight routes would be 600 miles. So we start off here by filling out assumptions for dedicated routes. So I'm assuming maybe a lot of times when people get into the business, they don't start off with a dedicated route. They might just start by taking loads off of load boards and kind of doing that spot freight work. And so I'm saying for the first 5 months here, we're saying 0% of your capacity is going to be used for dedicated routes. But then in month 6, we're saying, okay, maybe you are able to get a dedicated route, and half of your time is now used for dedicated routes. So once you do that, once you fill that in, you're going to be able to see, how many actual miles are driven per day for the dedicated routes. Now, one thing I want to show you to keep in mind here. So in this, back up here on row 12, we have number of trucks. And this would also, basically mean each truck would have a driver as well. So you can see that it jumps from 1 to 2, because in month 13 we buy that second truck, or we lease the second truck in this case, and then month 25 we go from 2 to 3. So that's all being automatically taken care of up here. And then, we're assuming, okay, once you have 2 trucks, well, now you'll be able to do 2 dedicated routes, or we're multiplying these numbers here by the number of trucks that you have in your assumptions. Now here you can enter in your average revenue per mile for your dedicated routes and a growth rate in that rate per mile that you expect to earn. Driver pay per mile. So if you are an owner-operator and you're not really paying yourself per mile, you could just put 0 here, and then basically any of the profits would just be yours. If you're paying a driver, I would put in their pay per mile. If you are paying them some fixed dollar amount per week or month, I would try to kind of calculate what their rate per mile is, and then put that in here. I think that's a little bit easier in the model to just calculate it that way. So for example, if you're paying someone $4,000 a month and they're to drive, 4,000 miles, to keep it easy math, then you'd be paying them $1 per mile. And so you should just put in $1 per mile. So hopefully that makes sense. Now here are some of the other variable costs per mile. Now these expenses, can vary depending on what kind of truck you have, what kind of driving you're doing. Certainly the price of gas has been going up a lot lately, and so keep an eye on these numbers and make sure that you think these are going to make sense for your particular truck, your particular routes, and that sort of thing. But these are trying to get as close to kind of industry average, at least for the current state of things, as the time we're recording this video. Okay, so that will give you your projected dedicated route revenue and dedicated route cost of goods sold. And your cost of goods sold includes the labor for the driver and the variable costs like fuel and maintenance. Now we get to the over-the-road or the spot freight loads that you'd be picking up off of a load board. And what we're saying here is that, so half of your time half of your time starting in month 6 is going to be used for dedicated routes. The other half will be available for spot freight. And we're saying of that other half that's available, we're going to fill 65% of it. We're actually going to drive 65% of the available miles. Now, maybe you think you're going to be able to just be completely busy all the time. So you could jump this up to, 100% or 95%, that sort of thing. So that will help you project miles per month and average revenue per mile here for spot freight. Again, you can adjust this based on what kind of driving you're doing and what the market is in your area. Driver pay, same thing as before. Fuel costs, same thing as before. And that will give you your total revenue for over-the-road work. And then we combine it all here for the dedicated routes and the over-the-road work here. Now, jumping over to our Input Other Expenses tab. So here you can see that we have a number of different expenses entered, kind of some standard expenses, and you can have them as fixed dollar amount or a per truck dollar amount. So for example, a lot of your insurance costs are going to be, they're going to go up with each truck. So you might have, so for those expenses that increase with each additional truck, we have selected per truck. So these are expenses, insurance expenses per truck. Again, you need to get quotes for your specific truck, your specific type of driving, whether you're driving, hazardous materials. Things could change here on the type of driving you're doing. So get specific quotes for these if you want to be really accurate. Otherwise, you might be able to find good estimates for the kind of work you're doing online, or use these kind of as some baseline estimate numbers. The other thing here, I have a facility rent, a spot for facility rent, but we put that at 0 because we're kind of assuming maybe you don't need to rent a facility, at least not to start. Now, let's say maybe as you add more trucks, maybe in year 4, you do want to rent even just a parking lot or something to store the trucks. Maybe that's $2,500 a month, and that just needs to expand those cells so we can see that. And then since we don't have a facility, we won't really have utilities for the facility, but maybe in year 4 we add a facility, so maybe we have some light utility expenses as well. And then here I just put in the first few months. You might have some legal or other startup costs that are unexpected as you just get the business started, and so we put in some buffer here for startup expenses. Now lastly, we're moving on to the input salaries and owner draw tab. And we're kind of assuming that you're probably not going to have any employees to start with. When there's just one driver, there's probably not need for a dispatcher. But maybe in the beginning of year 4, it might make sense because now you have several drivers. And so we have a dispatcher position that we entered in here starting in month 37. So you can change a month that they start. And if the position is going to end before the 60 months or the 5 years of projections, you can change that as well. And then we have just one dispatcher that we're hiring, so we just put 1 here. And you can add other positions that you would have here as well. So again, if you're an existing trucking business and you already have staff positions, you can use this template, fill out your existing positions and your existing expenses, your existing routes and number of trucks and loans and that sort of thing. It's just we have built this kind of out of the box for a brand new startup trucking business, but there's no reason that you wouldn't be able to make this work for an existing trucking business as well. So that once we fill out that salaries tab, that brings us all the way back to where we started, and we have a set of projections, and you can see here, based on the assumptions that we put in, total revenue in the first year of $342,000 with just under a $50,000 profit, growing in the second year up to over $100,000 EBITDA, which just means earnings before interest, tax, depreciation of your vehicles. So that is really the whole process, and you should be able to then take this file, and if you wanted to, you can send this directly to a lender or potential investor. The other thing you might want to do is you might want to hide these input assumption tabs if just from a presentation perspective. So what you can do is right click the tab down here and then click hide. And now if you ever wanted to get that tab back, or let's say the lender says, hey, I want to see your assumptions, you can right click unhide, and then select any of the tabs that you want to unhide and show those again. So what you might do is you may end up hiding each of these input tabs so that when the lender or investor opens the file, what they're going to see is this kind of at a glance tab, summary tab of your projections, and then definitely keep these tabs available and open as well. All right, that's it. If you have any questions, feel free to leave a comment down in the comment section of the video below, or reach out to us at support@projectionhub.com, and we'd be happy to help. Thanks.